That's Incorporated live on Channels Television, 1:30 p.m. right here. Coming up on the program, International Energy Agency reports show supply of minerals critical to the energy transition could move close to levels needed to support climate pledges by 2030 after a surge in investment. The National Monetary Fund is set to convene to discuss the approval of a significant loan of 57 billion shillings for Kenya. Plus, Seychelles is currently in the process of evaluating whether or not to sign an agreement to join the single Africa air transport market. Hello, welcome to the program. I'm Ladi Williams. First off, let's take a look at what's happening with the market, starting on the African continent. There we see the NGX still riding bullish, 1.72% at intraday. That's what we're seeing for the NGX, 65,000 new level. According to our 65K man, we have hit that right now, 65,715 points for the all-share index. Wonder if that's going to hold at the close of trade today. South Africa, though, 74,000, also in the green, 0.63% up at intraday. Let's look at all the markets we track. We see North Africa not left out with the bullish trend there. EGX 30 up 0.96% by 1%. Right now, we see Kenya closing positive yesterday, up 1.45%. Let's take a look at what's happening in the Middle East now. We see most markets we track there positive. Just one lagger today. Abu Dhabi index is up marginally, 0.05% at intraday. Dubai index, 3,985 for the L-share index. That's up 0.20%. Other markets we track in the Middle East now. We see Saudi Arabia also in green territory. Just the Qatari index, that's the lone loser at intraday, 0.19%. We'll see if that flips before the end of trading today in the Middle East. Let's head on to London now. Let's see what's happening in London, but we'll come back to London later on. Let's take a look at what's happening in Europe. We see air travel in Europe has nearly recovered post-pandemic. During the first half of this year, European airlines have reached 67% of pre-COVID capacity. Joining me now is Chipoda Chimbelu right there in Berlin. Great to have you, Chip. So how are things looking for Europe's air travel industry?
Well, the latest figures do indicate that the air travel industry has nearly recovered, but the pandemic has changed the landscape of air travel in Europe. So while the overall numbers when it comes to capacity have rebounded, where people are flying to and with which airlines has changed, especially here in Germany. The recovery in the continent's biggest economy is much slower than elsewhere in Europe. The main reason for Germany's slower recovery is that some airlines have been pulling back from the German market. Carriers have had to pay much higher airport fees in Germany. And when we look at the figures, it is Germany's domestic air travel that is lagging behind. It is at 57% of pre-COVID times, and the situation, of course, also looks very different when it comes to foreign travel from Germany, which is nearly back to pre-pandemic times, between 80 and 90%.
All right, Chip, but what's the outlook for Europe's air travel industry?
Well, it is summer and school vacations are starting for many kids in Germany and across the rest of the continent. This is the busiest time for air travel in Europe. So we're beginning to see some of what may be to come from airlines, which is perhaps some flight cancellations. Europe's second biggest low-cost carrier, EasyJet, has slashed 2% of its summer flight schedule, and it's not alone. Ryanair, Air France KLM and Lufthansa have also done the same. Airlines are trying to avoid the travel chaos that we saw last year when they were trying to deal with a resurgence in air travel while not having the staff they needed to cope with a higher number of passengers. But it's unclear that they'll succeed. The resurgence in air travel comes at a time when we have seen more strikes in the travel sector, including at airports. So it is, of course, hard to predict what will happen this summer. What is clear, though, of course, is that aviation is surging. July 6th was the busiest day for commercial aviation ever tracked by FlightRadar, with 134,386 flights. So we'll be watching whether another record will be set this summer.
Definitely watching out for that record. What can we expect from the markets today in Europe?
Well, traders will be looking at how Beijing plans to provide support for China's struggling property market. And banking regulation will also be another topic. The U.S. bank regulator wants to overhaul how banks assess risk and also the amount for their capital requirements. Now, that is something that traders, of course, will be keeping an eye on, in addition to the free trade agreement negotiations between the EU, the European Union, and, of course, Australia. Now, they seem to have hit an impasse. Australia says the EU is offering insufficient access to Australian agricultural exports, and Canberra has also said it is willing to walk away from the negotiations with Brussels. And when it comes to data, the expected data today includes German inflation and UK unemployment.
Chiponda Chibelu right there in Berlin. Thank you so much, Chip. Let's head on out. Let's see what's happening in London. We have Juliana standing by right there. Great to have you, Juliana. Good afternoon. I know you were speaking with Ini on Business Morning. It was about the migration bill. Any update on that now?
Good afternoon, Laddie. Well, the hotly contested illegal migration bill is due for a further reading in the House of Parliament today across a group of MPs. And that's because even though Suella Braverman, the Home Secretary, alongside Rishi Sunak, the Prime Minister, were almost convinced it would sail through the House of Lords, it hasn't. The House of Lords, which is an upper chamber of the Palace of Westminster, they've pushed it back a couple of times because they're not happy about some details within it. And so the Conservative Party have had to make some concessions. And of course, the illegal migration bill has caused lots of angst in this country. And there are people on both sides of the divide and of the argument. Basically, what the illegal migration bill is trying to do is to prevent people from coming over into Britain illegally via the English Channel or across the Channel in a lorry. And already last year, I believe there were about 45,000 people that came into the UK via that means. That was a record year. And just in the past 3 days alone, we've already seen about 1,300 people take the pretty difficult journey, and that's because the weather has been so good. Now, Prime Minister Rishi Sunak made a promise at the beginning of the year, which was to stop the boats. Going forward with the Rwanda scheme, the £145 million scheme, which was set up by the then Home Secretary Priti Patel. Basically, any asylum seeker that came into the UK, you would be shipped to Rwanda. Now, a couple of weeks ago, the government were, of course, stopped in their tracks because they lost their appeal at the High Court here in London, though they will be taking it to the Supreme Court. So that's one side where they're not getting any further along. Also, as well, I think some Conservative MPs have been pretty concerned about how individuals who are crossing the Channel will be detained, particularly young children, unaccompanied minors and pregnant women. According to the bill, they would be able to be detained for about 2 or 3 weeks, which even some Conservatives on the right think that is way too harsh. So, as I said, it's up for reading today. Suella Braverman will be announcing some of those amendments that they've put in place to try and appease those who are not backing the bill. But for anyone who's watching who is afraid of any of these new immigration laws that the government are trying to put through, hold your breath. Nothing is confirmed yet. And let's see how the reading goes tonight in the Palace of Westminster.
Right, definitely waiting for confirmation going forward now. But we see the average 2-year fixed mortgage rate now being demanded of borrowers. That's hit like a new level since last year. What's driving this?
Well, what's driving this is uncertainty with interest rates. We had data this morning, which, as you said, I was talking to Ini on Business Morning about labour market data we received from the Office for National Statistics, showing that employment had peaked at about 4%. But alongside that data, we also had a look at wage growth. Now, wages are growing at 7.8% in this country, which is not that great because inflation is 8.7%. So people are still struggling. But the problem is, the more money people get, inflation is going higher. And the Bank of England are pushing up interest rates to try and push down inflation. Now, what that is doing is it's costing so much more to borrow. And what we are finding, although the entire country is going through a cost of living crisis, there is a particular minority that are really carrying the burden of the actions of the Bank of England, and those are mortgage holders. As you quite rightly said, today, a 2-year fixed rate mortgage rate has gone up to 6.66%. It was at 6.63% yesterday, and we'd have to go back to October, or I believe August in 2008, to see rates that high. And what that means is that people are seeing monthly their mortgage payments go up by about £250, which, according to whichever market you look at, that's about 300,000 naira per month. Laddie, that people are having to cough up, along with other bills that are also high. It's just unsustainable, which is why today we did see banks and building societies being hauled in front of a committee of MPs who were basically asking them, what are they doing to support those who are struggling at the moment. Last week, the Chancellor, Jeremy Hunt, as well, he convened a summit where he was also talking to banks and building societies, asking them to do more. So there are options available for people. If you are somebody who is struggling to pay your mortgage at the moment, you are able to ask your bank to see if you can pay interest only at the moment for about 6 months. Also, as well, the government have put in some new parameters to make sure that perhaps you'll be able to lengthen the term of your mortgage. So you will see that your monthly payments go down. But these are only short-term solutions. And again, you know, the Bank of England and Andrew Bailey, the governor, are under intense pressure. Lots of economists are saying, is the Bank of England's inflation modelling parameters up to date? Are they outdated? The forecasting models are wrong. A small minority is suffering. And I think asking anybody at the moment to cough up an extra £250 to keep their roof over their head is a big ask. And again, it's only affecting a small minority of the country, which is why it's a cause for concern. We all need to carry the brunt of these economic issues we're going through.
Definitely a big ask, and asking anyone to pay more for anything right now with prices already sky high. But how are the markets looking in the UK?
Pretty decent at intraday, a mix of black and red. The all share is up 0.03%. The FTSE 100 is down at 0.13%. And the FTSE 250, the domestic market, that's up by 0.60%. In the currencies market, the British pound is currently trading up against the US dollar by about 0.39%. I think £1 will get you about $1.29 at intraday. It's trading up against the euro by 0.41% and down against the Japanese yen at intraday by 0.32%, Laddie.
Yeah, I guess we see the weakening dollar playing out right there. Thank you so much, Juliana. Always great having you. All right, now let's look at what's happening in the U.S. So U.S. stock futures, a little change today after the major averages snapped a 3-day decline as traders wait key inflation data slated to release. That's tomorrow. See the Dow Jones Industrial Average Futures, that's up 0.11%. Still looking for direction. S&P Futures, 0.17% up. And we see the tech-heavy NASDAQ, 15,221 points. And that's also up 0.22%. So it's not looking bad. See how the markets actually play out right there in the U.S. All right, we'll take a break now. When we come back, commodities market update is next. And we're looking at wheat. Do stay with us. All right, let's check out what's happening in commodity space now. See, wheat, one of the most important ingredients used in the production of widely consumed household staples, such as bread, noodles. The domestic price of a bag of wheat flour increased by 5% to 31,500 naira in the last month from 30K. Let's talk to Victoria Momona, analyst, financial derivatives company. Great to have you, Victoria. Good afternoon.
Good afternoon, Adi. Thank you for having me.
Great to have you. So what's driving this price up at the moment. We know prices are generally rising at this time. What's driving wheat flour here in Nigeria, and what is the outlook for the price of wheat-dependent commodities like bread and noodles?
Well, you see, it's no news that, flour millers are actually faced with rising cost of production, ranging from limited forex supply. We have the issue of rising raw material prices, machinery, elevated energy costs. I mean, aside all of these costs, which of course has been reflected in the domestic prices of the commodity in the last month, there is the 50% increase in the price of a bag of flour. And that is due to the adjustment of the exchange rates, which is used to compute the import duty. Following the unification of the exchange rates, the import duty was actually adjusted by 40% from the previous price of 422 naira per dollar to over 580 naira per dollar. And of course, this has had some effect or direct impact on the cost of production for these flour millers, and then had a direct 5% impact in the sales prices of the particular commodity. So this 5% increase in sales price is actually being reflected in the bag of flour that has actually been increased. And what does this mean for bakers that actually require flour to bake bread? It means increase in production for the bakers, and this is not good, especially at the time when there is elevated energy cost. So we could see that this would filter into the price of bread and other pastries that these bakers actually make. And then, although the price of bread has actually been flat for the past 1 month, but with the increase in the price of flour, we could see the price of bread increase further, as well as other commodities that are being produced with wheat, and this would feed into the food inflation in the coming months.
Yeah, and looking at global wheat prices, we've seen they've come down from the highs of last year. It's down about 19%, year on year, and we see the IEA there forecasting that the EIA is forecasting that wheat prices are still going to rise, in 2023. All eyes still on that Black Sea grain deal, if it's going to be renewed, next week. So looking at all of this dynamics playing out right now, what do you think is the short and long-term effects, of rising wheat prices on the Nigerian economy?
So you see, Nigeria still import a significant amount of wheat into the country. At least they spend like $2 billion annually on wheat importation into the country. And of course, when a country relies so much on importation, the economy is actually subject to some sort of volatility in the global market in terms of the prices. So with EIU's projection that prices for wheat would remain elevated, it means that the cost of importation of wheat into Nigeria would actually increase. And that means our import bill would increase, and then it would be a dent on our foreign exchange in the country. And then for manufacturers, it means increase in cost of production, because they would require more forex to actually purchase that commodity that they use to produce other commodities here in the country. And then there is not so much cost burden that the manufacturers can actually bear in the country. And then along the line, you can see that this cost is actually being passed on to the consumers. And from an inflationary point of view, it is not so good for the economy. This is because food inflation is already as high as 24.82%. And when prices continue to soar higher and higher, we see that it continues to increase food inflation in the coming months.
And definitely, we're looking at, sustaining wheat imports at this time. Investors wondering how we can actually, continue with this. But we did have that cassava, bread policy. What's happening with that?
Well, I mean, cassava bread policy was actually one of the policies that was introduced under President Goodluck Jonathan regime, and it was done with the aim of making cassava flour actually the main flour that will be used in making bread in the country. But I mean, there are several policies that were actually put in place to actually encourage the substitution of wheat flour with cassava flour. But there were issues surrounding that particular policies, issues like the dissatisfaction of the consumers, because the cassava flour didn't exactly have the fine texture compared to the wheat flour. And even when the government actually introduced the use of cassava flour in the country, there were still issues regarding the output of cassava in the country, because of course when you are substituting a particular commodity for another commodity, it has to be in abundant supply to replace the commodity that you want to change. Exactly. But then again, we had shortage of cassava, because cassava already is being used, or was used, or is currently being used to produce other commodities like gari, and other types of flour. And then again, it's short in supply, and that's again actually made the policy not so feasible. And then again, when we compare the costs in using cassava flour and wheat flour, using cassava flour actually is more expensive compared to using wheat flour, because in order to form a dough for cassava flour, you have to use as much as 2.5 kg of butter to form a dough for cassava flour, compared to about 500 grams for wheat flour. So that is like an extra burden for the producers of bread at that point in time. So because of all of those issues, we found out that the policy was not sustainable in the long run, and we found out that most of all the producers that used cassava flour or ventured into the use of cassava flour for bread actually reduced the amount that they used in making bread, or totally end the use of cassava flour in making bread.
Yeah, and definitely we don't need extra costs, for bread producers at this time. And I'm definitely going to try and taste it to see how it actually works out, if it tastes good. All right, thank you so much, Victoria Momo, analyst, Financial Derivatives Company. Thank you.
Thank you for having me.
All right, now let's look at some news now. The International Energy Agency reported today that increased investment in critical minerals production could help meet the growing demand for minerals crucial to the energy transition and support climate pledges by 2030. Investment in critical minerals production rose by 30% to $41 billion in 2021, following a 20% increase in 2020. The IEA predicts that the supply of key battery mineral, lithium, will reach 420,000 metric tons by 2030, close to the estimated demand of 443,000 metric tons. However, this falls short of the 702,000 metric tons required for net zero emissions. And in a highly anticipated development, the International Monetary Fund is set to convene next week Monday to discuss the approval of a significant loan of 57 billion shillings for Kenya. Despite the loan aims to support Kenya's economic growth, infrastructure projects, and social programs. The outcome of this meeting holds great significance for Kenya's future. It has the potential to drive job creation and address pressing challenges in sectors such as education and healthcare. The Kenyan government and citizens are eagerly awaiting the decision, hoping for a positive outcome that would fuel the nation's progress and development. And Seychelles is currently in the process of evaluating whether or not to sign an agreement to join the Single Africa Air Transport Market, an initiative of the African Union. The Minister for Transport for Seychelles expressed reservations about signing the agreement, citing the need to protect the country's aviation industry, particularly Air Seychelles. The remarks were made during a two-day workshop organized by the Department of Civil Aviation, Ports and Marine of Seychelles in collaboration with the Common Market for Eastern and Southern Africa. And All Truck Drivers Forum and allied South Africans has called for swift action against the perpetrators behind the recent wave of attacks targeting truck drivers in the country. It follows a disturbing incident that occurred in the early hours of Sunday morning, the N3 highway, where 6 trucks were engulfed in flames. According to police, a group of armed men stopped the trucks. Van Reenens Pass forced them out of their vehicles before setting the truck on fire and then fled the scene. Overnight, 2 more trucks had been set alight by the arsonists, but National Police Commissioner has announced that police roadblocks will be set up along major transport routes countrywide to prevent any more truck attacks. Take a listen.
We are hoping that the police can find the culprits that are doing this, but we are also hoping that the relevant departments should do what is correct, because it's not the South African drivers that said truck driving is not a skill. It's a skill that is supposed to be reserved for South Africans. Let them do the enforcement on that. Let's get all these foreign drivers out. Let's have South African drivers in, because there is even a fine that is prescribed there, that should an employer be found to have employed a foreign person without following the proper procedure, there is a fine. But here in South Africa, we've never heard of such employers being arrested and those fines issued to them. So we're hoping that the relevant departments will do the correct thing so that our South African brothers can get employment.
All right, definitely a developing story right there in South Africa. We'll keep tracking that. Well, that's the show today. Thank you so much for watching. Don't forget you can watch this again on our YouTube channel. Flip over to YouTube and check our videos, and you can watch all our productions. Thank you for watching. I'm Ladi Williams. Bye-bye.